What does it take to move trillions in global markets, right? As last night we saw, all it needs is just one headline, and that too unverified, and as markets found out later, a fake one. Now, this is a story of how sentiment whipped in minutes based on pure speculation and nothing else. Let me tell you how this played out. Even as equity indices were starting to recover from the lows, rumors broke out on Wall Street that Trump may announce a 90-day tariff pause for all countries except China. The headline was picked up and flashed across news networks, and Wall Street went vertical. The S&P 500 added over $3 trillion in market capitalization from the intraday lows. I mean, in terms of percentage gains, the Dow was up 7%. I've taken lows to the high. Remember, some part of it, of course, already happened, and market, as I said, was already recovering when these headlines hit. S&P went up 8.5%, the Nasdaq rallied 10%, all in a matter of minutes. Well, but, you know, in a matter of minutes again, but minutes later, came the first crack. Reports said that the White House was unaware of any such move. The White House officially denied the story to CNBC, calling it fake news. And almost immediately, the market went south, giving up all the gains it had accumulated a few minutes prior. In all, trillions of dollars, you know, by some estimates, $5 to $6 trillion swung on the back of this headline, this fake headline, in less than 30 minutes, driven purely by hope, greed, herd behavior, and just general sort of anxiety. What are the lessons here? And I think the lessons are very true for our markets as well on a daily basis, but I think in markets like this. You know, this is a market where there is extreme emotion. Markets are in a fragile state. Number one, you can't take headlines at face value. Please investigate sources first. I think that is paramount. It has to come from credible news sources, not an unverified Twitter account without any backing. Also, it kind of helps to stay a bit cynical, especially in markets like this, unless proven otherwise, even if a short-term bounce cannot be ruled out. I mean, I think it just generally helps. Bring me proof. You have to have proof before you decide to act, because there is real money at stake. And of course, as always, remember, short squeezes in bear markets, or I'd call it this bearish markets, can be vicious. I mean, they can be absolute rippers like what we saw yesterday. To wrap it up, I was wondering, right, and I think many are as well, markets were down sharply 4%, they went up 4%, so 8%, but they did not go down 4%. We ended flat. Why is that? Why is that? And the reason perhaps is a little tongue-in-cheek, but, you know, maybe the thinking, at least among some market participants, is this: imagine if a fake headline can do this to markets, what could a hypothetical real headline of some sort of relief do? So maybe better to be a little light. The simpler explanation, of course, I think is also in the mix, that markets are much cleaner. We've had 2-day historic falls, and people just want to stay a little light. So I think that is what we are looking at this point in time. So that's the story. You know, these are markets which are moving much faster than facts. So be careful out there, because this is a story which is not wrapping up quickly. And headlines, well, as they are important, they need to be real, verified, before you jump in, take positions one way or the other.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.